FS Securities. We are an education and information firm on the Gold Coast in Queensland, Australia. And every Monday morning I go through what happened globally and try to forecast what we may see this coming weeks. I'll show you how investors and traders can make money on our stock market and also the overseas markets. I'll show you what is hot and what is not, and what you should hold and what you should fold. And by the way, if you like the feedback, I guess that would be appreciated if you can give us some. And if you like the program, why don't you share it with other people that you know? Well, over the weekend, we've seen the Dow was down 730 points. The S&P 500, that's the broader index, was down 2.4%, adding on to the 0.6% drop the week before. And you can see here 3 weeks ago, the market was about the 3,041, so it's nearly about 31 points or 32 points down from over the last 3 weeks. And the Nasdaq Technology Index, the star performer in America, we've seen a drop of 2.6% after rising week after week after week. And by the way, Facebook has actually lost a lot of points on the weekend. And its leader, the CEO, the former, actually lost $6 billion on paper because of the drop in the share values. In Europe, the StoxX 50 index, which comprises most major European markets, was down 0.4%. In London, the FTSE was down 0.2%. In Germany, the DAX was down 0.7%. And in Japan, the Nikkei was up 1.1%, and in China the Shanghai index was up 0.4%. Our market finished the week at 5,904, 86 points drop on Friday, and the futures, by the way, showing that the market most likely will open down 91 points at the start of trading. Gold 1,780 and was up overnight by $9.70, but when you compare week on week, you can see that's nearly about $27 higher from the week before. And you can see 3 weeks ago it was 1,737 US per ounce, a major increase in the price of gold over 3 weeks. Silver also had 3 weeks of climbing and finished at $18.17 US per ounce. Brent oil, $41.02, nearly $1 less than the week before, but you can see it's nearly $2 something, $2.30 above what it was 3 weeks ago. And the crude oil, that's the West Texas crude oil, $38.49. Nearly $1.30 below what it was a week before. Soybeans continues to go down, and the Australian dollar 68.65 US, that's on Saturday morning, and will give you 61.2 euro cents, 55.6 British pence, and 106 New Zealand. And iron ore price, $103 US per ton. And if you follow Bitcoin, 9,105, that is $140 lower overnight. And that converts to approximately 13,275. That's nearly about 10% lower than what it used to be about a month ago. And by the way, it used to be about 20,000 Australian dollars approximately 2 years ago. Okay, now we compare what happened last week. Here we've got the changes over 1 week, and then we like to combine the 2 weeks together to see how the trend actually materializes. Okay, well, the Dow Jones was down 3.3% last week over the full week. However, you put the 2 weeks together, you can see that it was down 2.3%. It tells us that the week before, the market was up 1% or thereabout. Okay, now the Nasdaq the 2 weeks together, despite the drop last week, was still 1.8% higher. The broad S&P was down 1% over 2 weeks, and you can see it obviously 2 weeks before it was actually up 2% or thereabout. The US dollar continues to go lower, and the Australian dollar, let's say over 2 weeks, down 0.1%. Gold, you can see over 2 weeks, up $47.50 US per ounce. Most of it came from last week, but the week before was also a rise. Silver, the same situation, 2.7% rise over 2 weeks. And light crude oil, that's the West Texas crude oil, was up 5% over 2 weeks, despite the drop of 3% last week. 2 weeks together, up 5%. Okay, if you're interested in any of the other commodities, all you have to do is talk to us. Now, looking at the Dow Jones chart, that's the weekly and that's the daily, you can see that on Friday it had a major drop, and that pink line is the 100-day moving average. Is it going to be that support line? Well, it depends what happens tonight in America. Of course, there is a lot of concern about the coronavirus flare-up again. Now you can see from the highest point to the lowest point, we've had a major recovery. About 50% of the drop was actually recovered in about 10 weeks. And it's now hovering around the 50%. Is it going to be up at the end of this week, this coming week? Well, it will be interesting to note. My expectation is I feel that there is a good chance that the market will find that 100-day moving average as being the support. However, if it drops below it, we're going to end up, if you look at the Bollinger Band, that's the upper band and that's the lower band. That is the 21-day moving average. It's now below it. And if it continues to be below it and the two bands, and by the way, the upper band is 2 standard deviation above the 21 moving average, and that is actually the 2 standard deviation below the moving average. If you look at the stochastic is bearish, the parabolic stop and reverse, the dots over the candle, bearish. However, the 21-day moving average is below the 9-day moving average. That is actually bullish. You have contradicting indicators here. I would say it's more or less the combination of weekly and daily. We are in a neutral territories. Now look at our market. Now actually look at the mechanical system for the American market, neutral for the Dow. We're still bullish on the Nasdaq. As we've seen previously over 2 weeks, we were still positive. The S&P 500 is more bullish than the top 30. Interesting. It's interesting that the top 30 is made up mainly of the big companies that happen to be in the IT. But GE and Boeing happen to be in there as well. So there is confusion between some stocks that have pushed the Dow up, but then there are more that pushed it down. We ended up with a neutral. Gold is up and up and up and up. That's what we end up 2 weeks ago on the 20th, 2 Saturdays ago. We said we are bullish for the aggressive trader and the very aggressive trader. However, neutral for the investor and the conservative trader. It's all about time frame. The investor is a long-term investor, and these indicators are contracted or derived from the monthly and weekly. However, here we've got the daily and the weekly. So we always go to much quicker and much shorter term on the charts as we move to the right from investor to the very aggressive trader. These recommendations or these coming from the indicators are actually, they change only once a week. However, here they just change every single day. And again, we were neutral for the majority of the week. But have a look here. For the first time, we see after the week before we ended up with neutral, then we ended up now with a bearish forecast for the very aggressive trader. Remember, they change very more frequently. And the Nasdaq, with for the conservative trader, we ended up neutral. But for the investor, long term, bullish. That means we expect the market to go higher in the next few months. Gold, bullish, and we remain bullish for the part of the week. Natural gas, bearish now. And for the Australian dollar, we are neutral. We're going to remain neutral after we were bearish, but because 2 weeks ago we've seen a drop from 69 point something US cents to 68.5 this morning. Okay, now looking at the chart, the Australian dollar, the Australian market, you can see that we've also recovered most of our drop from the highest to the lowest, and then we hovering around the 50% retracement. And again, like the American market, are we likely to remain above that line? The parabolic stop and reverse on the weekly is bullish. The stochastic is almost neutral, and the 21-week moving average is now touching the 9-week moving average. That's neutral. And on the daily chart, the stochastic is bearish, parabolic stop and reverse is bearish. The 9-day moving average is above the 21-day moving average. That's bullish. However, for the long term, we can see that the 200-day moving average is above the 100, but then the 50-day moving average crossed over it. So that's an interesting, and we have a lot of conflicting indicators here, and therefore we believe we should be neutral on the ASX 200. Okay, looking at the changes over 2 weeks and 1 week. At the closing bell and over the full week, our market was down 38 points or 0.7%. It closed at 5,904. And over the full 2 weeks, the ASX was up 1% and finished and was up 56 points and finished at 5,942, as you can see here. Now, our gauge, the market gauge, the ASX 200, is made up to a greater extent by 2 major sectors, the financial and the materials. And when both of them are up strongly, usually it drags the ASX 200 the same direction. Well, last week the financials were down, so the banks were down. However, the materials, that is BHP, Rio, Fortescue, were up 2%, and we ended up with a conflicting negative. But however, 2 weeks ago, over 2 weeks, the financials were up and the materials were up, and we ended up with 1% rise over 2 weeks. So we can still see that the market over 2 weeks was still positive. Okay, now in terms of our stocks, you can see that looking at the sectors, and from the sectors, actually the gold was actually the highest, 5%, and was up 3% over 2 weeks. So you can see negative fall here and then rise here. Putting it together over 2 weeks, the gold sector was up 3%. The worst sectors were energy and industrial, down at least 4%. Across the top stocks, the best performing stock, AMP, was up nearly 6% and was up 8.5% over 2 weeks. Newcrest Mines was up 4% over 1 week, and 3.5% over 2 weeks. The worst performing stocks: Santos, Worley, and Leighton Holdings, CIMIC. Okay, looking at our indicators, you can see that on Saturday morning, when we did this forecast, we can see that most sectors have gone bearish for the very aggressive trader, with the exception of gold and the mid cap. Gold is actually bullish for all type of investors and traders, and mid cap bullish for the aggressive trader and the very aggressive trader, and neutral for the investor and the conservative trader and the aggressive trader, with the exception of gold and mid cap. Looking at the daily, again, daily has been bullish. That's actually on Wednesday morning and Thursday morning. Okay, now in terms of stocks, we finished the market with a bullish for the aggressive trader and the very aggressive trader, and the banks, we can see here bullish for CBA, bullish for Macquarie Bank, bullish for Transurban, and bullish for TPG. We like to look at the volume. On Friday, there were actually more advances than declines. 39% advances. 39% of all the stocks advanced and 22% declined, with a slight drop in the volume. But you look at the market is actually hovering up, down, up, down, up, down, up, down, and down today as well when the market opened. So you can see there is a lot of volatility in the market. If you look at over the full 5 days, the last 5 days, you can see that the declines exceeded the advances. That's for last week, the last 5 days. And the week before it was the reverse. The week before was the reverse. You can see here we've had some reasonable increase in the market about 5, 6, 7 weeks ago, but now we can see a lot of volatility. Okay, now in terms of the stocks that actually were the most active on Friday and compared to the week before, you can see 19th of June, 28th of June. These are the companies that were actually up 2 weeks ago, and these are the stocks that went up on Friday and showed some reasonable increase. 5.3% for Magellan. AMP was up nearly 5%. Suncorp was up nearly 4%. Appen, technology stock, up 3.5%. In terms of companies that had excessive volume, what we do here, we scan the market and we see over the week compared to the 50-week moving average. These are actually the 50-week moving average here. This company is Sonic Healthcare. The average weekly volume over 50 weeks was 7.2 million transactions. Well, last week we've seen nearly 9 million. So we need to know why. And all these companies had increase in the volume and increase in the price. So again, that's for the top 50. That's the companies with nearly at least $1 billion capitalization. Sonic, by the way, is got $14 billion dollars market capitalization. Newcrest Mines 25 billion, Rio Tinto 36, Wesfarmers 49. All of these companies had increase in the price and increase in the volume. I wouldn't worry too much about Wesfarmers. The volume was only up 3%. However, you look at Sonic, the volume was up 25%. So we need to actually go further and study why it happened. Bellevue Gold, we've had a paper put on our website and we started to trade Bellevue Gold about a few days ago. And you can see the price was up 10% and the volume. The average weekly volume is 5.2 million transactions. Well, last week we've seen 36 million. We need to understand why. So we go and do more research, and then we produce a paper, we put it onto the website, and we start to trade it. By the way, we always try to trade these mid caps in CFDs or in options because of the leverage. Now on the daily, okay, we look for daily excessive volume. In here, in this case, we look at 50-day moving average. For instance, West Farmers, on a daily average, it has 2.4 million. However, if you look at on Friday, it had 3.2 million. An increase of 34% in the volume, and the price was up 0.5%. Not a great deal here. On the mid cap, Sigma Healthcare, we can see that the healthcare companies are really doing well. Sonic Healthcare, Sigma Healthcare. So we need to look into this sector. The market price, the stock price, went up by 2.5% on Friday for this stock, Sigma, and the volume was up 53%. The average daily volume is 2.4 million, while on Friday we've seen 3.7 million. We need to understand why. And on the downside, we've got all these companies. And by the way, these slides will be on our website shortly. Okay, now 50-week high. That was actually on Saturday morning. We've seen that this company here, we're not going to worry about any company that's not painted blue because we don't like to trade anything below 10 cents. Rumble Resources, 14 cents. The price was up 27%, up 3 cents with 4.5 million. Again, all these companies worthwhile for investment for the aggressive trader and the very aggressive trader. And these companies have all went down by these percentages. Again, we only concentrate on those with the blue cell because they are above 10 cents. Everything else is below 10 cents. We like to ignore it. Okay, in terms of companies that are going X stock, X date, Plato Income. Actually, we look down at these companies here on the 22nd. Harvey Norman, that's passed. So we've got Morphic, Ethical, Premier, Joyce coming up, ARB Corporation. Our CFD trading, at the moment, we're making some money on ANZ Bank. We're losing as much on Zip, and we're losing some money on the ASX 200. But we only have a small number of contracts. Okay, everything we said today, this presentation was prepared for general information only. We did not take into consideration your objectives, your financial circumstances, and of course there is risk in the market. There is no guarantee that everything we said is going to happen. There are too many variables. So of course, whilst we believe we have about 50 to 70% probability of success, there is risk in the market, and you need to understand your risk appetite and also understand what sort of risk you're prepared to take. Okay, if you have any questions, you have to ask. Okay, these are our details. You can write to me at george@fssecurities.com.au. You can ring my mobile. If you ring from overseas, 61, the country code. You don't need the 0. Overseas people, 61-411-259526. Local calls on my mobile, 0411-259526. Happy trading, and I hope you make some money this week.